morning, Stocktwits Nation. It is July 15th. It is a Tuesday. That means that Jake Wu is with us for some charts fun. Hello, Jake. And Shay
Hello.
Boloor is here, as always. What's going on, Jake? Anything new and exciting since we saw you last week?
No, not too much.
You didn't blow anything up? No fireworks?
No,
Ah,
no.
that
Kept it
time
pretty
has come and
tame.
gone.
Yeah, it's like a once a year type thing for me.
Yeah.
Yeah, no, just keeping an eye on the markets. Kind of shifted my attention. I know we discussed China last week, and I
Yes.
was gonna kind of start rolling some capital into that, and I'm a man of my word, so I did that last week, and now we're starting to get a little bit of the triggering of the technical setup now. So generally have the indicators aligning, and then you have something to trigger that. And so we're kind of seeing that with the Nvidia news today, and then just some
Mm-hmm.
other data out of China overnight.
Yeah, let's start with zooming out. I want to talk to Shay about what's going on with Nvidia and the chips ability to be reselling those in China now. And then Jake, let's go into some of your China charts because I know we have a few that you're tracking. But Shay, what's going on? What was the news that broke with Nvidia? How is the market responding? And was this something that people perhaps saw coming?
So the news that dropped overnight was that Nvidia gets to sell their H20s again to China. That's a massive, massive deal because they make around 20 billion a year on China revenues. I think might be their fastest growing customer. The China market accounts for 20% of the global AI demand. So it wasn't just Nvidia as well. AMD was also followed suit with their
Mm.
chips. But I think this is a huge win for the AI theme, mainly because I think that 20% of the global AI demand is getting reattached to the bloodstream of the most important tech build out in history. So even though it's just $20 billion the last 12 months, it's probably gonna be $30 billion next year. Nvidia gets its fastest growing customer back, and that domino effect doesn't just lift them; it does reignite the whole AI stack from fabrication to memory to the networking to connectivity. Like you guys hear me talk about this all the time. The whole semiconductor ecosystem is connected with each other. So once the bloodstream of all that ecosystem, aka Nvidia, is getting reignited again with their fastest growing customer, everyone else is going to be eating really well at the table. So I think this is going to reaccelerate the tech trade. The question though is the market's been on a freaking tear the past couple months. You have to ask what's being priced in, and I do believe that even right now, like QQQ is up 0.7%. This is the type of news that will cause a 1.52% move if this happened a couple weeks ago. So there might be some near-term fatigue, but don't confuse any kind of lagging reaction to something. This is a big deal because there's going to be a U.S. China uh, handshake agreement coming down the pipeline. This wouldn't have happened if it wasn't
Yeah.
further accelerated than the market realized. So I think this is great news. I mean, Nvidia is the apex predator, and when it moves, everyone's feeding off of it. Uh, Off the same kill gets to feast. So I think that this is bullish news in the summer months, but there might be some profit taking. I don't know.
I think you're right to say this is definitely a goodwill gesture of the ongoing trade negotiations. Also, I think indicative of Jensen Huang's leadership. I mean, this was came about after one-on-one negotiation between Trump and Huang, and apparently during the meeting, Huang advocated for the continued sale of these chips, saying that he actually needs to do this if the U.S. wants to maintain American dominance in AI, and he was able to make that case. So. Definitely some positive news if you're in that sector. Let's stay on China for a bit, Jake, because I know you have a few things to show us, and I'll let you start wherever the wind might take you. But as you mentioned, you discussed making some moves in this space last week. Would love to see some of what you're looking at this week.
Yeah. Like Shai mentioned last week, this is definitely a rental market that I like to play into. It's not something I generally am looking at like going too long term in China, but there are specific points where Baba especially just signals very hard. And I have a set of 3 indicators: RSI, Williams percent range, and MACD. And I use those kind of overlaid on each other. And a lot of the time they will give a very basic signal when we are nearing a reversal point, whether that's on the upside or the downside. So I'll jump in here and kind of just discuss the signal here. It's not a secret. I have a video on it. It's nothing like, this is proprietary. It's something I came up with. It took me a while to come up with, but it's pretty simple. It's just, as I mentioned, the MACD is more or less kind of gauging momentum and kind of using the moving averages, because the MACD is a function of moving averages. So I don't like to have moving averages on my chart because I'm just very OCD about keeping my chart very clean. So the MACD kind of acts as the moving average part of the analysis. The Williams percent range is like a highly sensitive RSI, so it will generally trigger first, depending on whatever inputs you use. But the Williams percent range is the one in yellow, so the one below the MACD. And then the third one is just the RSI. And so the RSI is also really just kind of gauging momentum. And so all of these together give a pretty solid signal. And the signal is simply when the MACD is curling to the upside and or you have kind of divergence with, and this is kind of a different type of divergence. A lot of people don't use this, but a lot of the time I will either take off the histogram or the MACD and signal line. So for those that aren't familiar with the MACD indicator itself, the blue line's the MACD line, the signal line is the yellow line, and then the histogram, and I think a lot of people try to make the histogram a lot more complicated than it is. The histogram is simply just showing the difference between the two. So for example, here you can see where I just drew this black line. That bar is essentially a function of the distance between these two. So when you get these interesting divergences, and I'm just going to turn off the MACD and the signal line, this is a time to really start looking pretty heavily here. So notice how the histogram, the low of the histogram in May, is much lower than what it was in July. So you have this upward sloping line. Now, if you go to where this low is in May, you're at a much higher price. So you're up here. And so we actually have divergence on the histogram, which a lot of people don't look at, but it is totally a form of divergence. And so this is what really caught my attention. But then on top of that, you had just a mix of everything. And the thing about China names, and this is something that really makes China a pain in the ass to trade, is a lot of people will look at bull flow or bear flow, but in this case, it's bullish flow that I was paying attention to. I mean, you had bullish flow coming in the last few weeks, and China just kept, especially names like Baba, just kept dropping to new lows. And so the pain trade is really, people look at this flow coming in and they think you're going to get a reversal, and then you really have to cross-reference the lower indicators. And so sometimes you can have the RSI and the Williams percent range kind of oversold for a while price just continues to drop. And if you're in the wrong options contract, or if you're in any options contract, you can really get a pretty severe drawdown while you wait for this to finally play out. And really the signal here is when you get divergence on the RSI. Divergence is simply when price continues to hit a new daily close, lower daily close. But in this case, the RSI is the one that's signaled. And this is what I call mathematical divergence. If you were just looking at this chart, you can't really tell there's a higher low on the RSI. It's very hard to see. So you just kind of have to zoom in and literally kind of zoom in so much to the point where you're like, wow, okay, this is barely divergence, but it is divergence. So that's why I call it mathematical divergence, because you almost have to go in and look at the values that you're comparing. The low from July 7th to the low of July 9th. The July 9th low was slightly higher, so that does mean that's divergent. So we had all of the things aligning. You've continued to have bullish flow flowing into all of this, especially at the ask. So when you are looking at options flow, you need to look at what's going on at the ask. A lot of people sell puts and calls for many different reasons, but people who are buying at the ask, whether it's calls or puts, that is conviction. That is directional conviction, because they are buying they are buying direction, right? Especially if it's out of the money calls. So you saw a lot of calls coming at the ask way out of the money. So you saw a lot of 115s, a lot of 120s coming in yesterday. Something that is interesting because the last few days, I'd say week, pretty much since we were on last time, we did hit a new low on what was that, Thursday, before we finally reversed pretty hard on Friday. So from the daily perspective, you got a really strong signal here. The upside targets, anytime I look at BABA, since it's such a gappy stock, the upside targets are always gaps. So we're already gonna, be above 110 at the open. We're gonna be above 112 at the open. So in this case, the next upside target here is like 120. So I'm still targeting 120 for BABA, and that's kind of my main thing. I've got October calls, so I'll see how things open up today and kind of go from there. But China is literally just about to break out here, and so it'd be really dumb for me to just sell the whole position. I've done that before with China, and I've left way too much money on the table. So you've got this kind of ascending triangle forming. You've got the volume shelf. So the index itself, the Hang Seng, is still looking like it hasn't even made the move yet. And so for me, that's telling me that China probably has a lot of room left to move up. And it's not just BABA. Baidu is another one that I think could do very well right now.
Yeah. So when you're setting these up, how do you choose which companies within sort of the landscape of China to focus on? Is it just the more popular ones where there's the most volume going, or is there something in particular about these tickers? I guess the index makes sense, but how do you sort of determine which ones within that category?
Well, I mean, BABA and Baidu are both kind of the AI play. So for this particular move, the Nvidia news definitely is going to move BABA and Baidu quite a bit. A lot of people look at BABA as like Amazon, like just a shopping website. It's a lot more than that. It's a massive AI play as well, and so naturally, it's going to move very strong when you have the Nvidia news like that, like we saw overnight. So yeah, Baidu's another one. They just came out with news. I think they're partnering with Waymo. I don't know. Something like that, one of those companies. So Baidu is literally just on the cusp of a massive move here. So Baidu is another one that just is extremely frustrating to you. I mean, even if you're not in the trade, just like watching the price action is annoying just to watch it, because it's so, over the last year, it's pretty much done nothing. You get these 20% pops and then all of a sudden you're back down to where you started. But we do have this extremely kind of tight descending triangle forming here, and statistically descending triangles are bearish, but when you do have a breakout of the apex is just kind of the very kind of edge, the end of the setup, you can have some extremely aggressive moves to the upside when these do fail to break down and actually reverse to the upside. And Baidu is known to easily have 10 to 15, 20% days just out of nowhere. So this is one I would definitely say, watch pretty closely. You had some pretty bullish flow coming in there yesterday as well for the 89s, which are already in the money. And same thing, right? You've got this kind of flat price action over the last year, but you can see the Williams percent range. It's trending upwards, right? You've got higher lows shown by the upward sloping arrow. You've got the RSI trending upwards shown by the upward sloping arrow. MACD recently crossed back in February, but this is a monthly chart. So, that can, just because the monthly MACD crosses doesn't mean you're going to have a move like the next day. It's a monthly chart. So sometimes it takes a few candles to play out. We're starting to see that MACD line start to accelerate higher versus the signal line, showing me that momentum is starting to increase. So overall, if we get a breakout here, Baidu could be a massive mover in the coming weeks. And on top of that, seasonality, this is just a really strong seasonal time of the year for China. July and August are extremely seasonal, seasonally good times. Sometimes, if you look at whatever data point you're looking at, the best.
Interesting. Let's zoom out a bit on this news. It's actually, I think, Uber and Baidu teaming up. And I know, Shay, this is something you've talked about, just Uber trying to take on Tesla in the AV race, going to be doing a lot of collaboration. I think I saw news that
Here we go.
Tesla is in India. They're rolling out their a vehicle there. It's $70,000. It's a little higher because of the tariffs. But do you have any like high level thoughts on the Baidu Uber news? Just when it comes to the autonomous vehicle race heating up.
Yeah, so I think that, I mean, this is right out the Uber's playbook. It makes sense. When you don't own any proprietary technology, the only thing you can really lever is your networking effect. And by leveraging your networking effect, you need partnerships. So I think everyone in the world is going to really start partnering up with Uber. And I think they have, don't quote me on this, but I think Baidu has like 10 million rides across those 15 cities in the Middle East and Asia. So that's a huge, huge area territory that Uber gets exposure in. And I think this is going to be being multiple partnerships. The question though is eventually, do you think that Waymo is going to ice Uber out? Or, and then Waymo and Tesla are just going to have this duopoly in autonomous ride sharing. And that's part A. Part B is, does Nvidia's chips just continue to innovate at such a drastic pace that a lot of these OEMs are going to start creating a similar product? I don't know. Like, I just think that in this, capitalism is about to get so freaking brutal in this future, this new digital economy, that owning the proprietary technology, owning the actual data is so freaking important. A lot of companies are going to get replaced a bit, and I think Uber is going to be able to capitalize on that, but it's so early in that whole theme that you just don't know. But these partnerships are a great sign. Like, it's a, I won't call it a low hanging fruit because it's substantial deals, but it's something that they have to do. Maybe it's kicking the can down the road until they figure out how to, I don't know, get their own proprietary technology or IP. Like, I still think they should acquire Rivian. I don't know why they don't create this competition with a with Robotaxi and Waymo and just go in that. I mean, lidars. A lot of these lidar companies are not that expensive. Rivian is, I think, still stuck at the same kind of valuation it was the past couple years. Like, there is a world where they can go really heavy on M&A and compete, have a dual product, but I don't know if that's a big rock for them. I just don't think they want to do that. It's
Yeah.
capex heavy.
I saw a wild headline out of Rivian and TechCrunch this morning that the CEO, RJ Scaringe, his voting control slipped a bit because he had a pretty big divorce settlement, and his ex-wife Megan ended up taking a lot of those shares. So the company is saying that it's not going to affect operations, but it was a pretty big deal, and something to watch for Rivian, although that's a little outside of the drama that's happening within these companies' organizational walls, but interesting to see there. Let's quickly turn to this idea of government contracts and government contracts being awarded to different players. Last night, it was reported that XAI and Google were among the beneficiaries of some new government contracts. Grok being, I think, the chosen LLM of the Defense Department. I don't know, Shay, correct me if I'm wrong. It seems like there's a lot of shifting going around and where these dollars are going. Do you have any thoughts, Shay, on these new contracts or what that might mean? I was a little surprised because I feel like Elon's sort of icing himself out of the situation, but is it just a matter of they're going to go with the best tech?
I think they're going to go prioritize optionality over egos, is my guess. But I think this is the beginning of, you guys. I don't think people realize how many years of spending there's going to be on these secular growth themes. The the U.S. government, like, it is a dinosaur mover. Like, it just moves so slow, and there's a huge national security element towards AI that is not just data centers. It's far greater than that. Just look at MP Materials. Like, rare, that's a historic deal that was just announced a couple days ago, where the US government essentially is a major shareholder of a publicly traded company, rare earth supplier, only one in the Western Hemisphere, national security assets. You're also seeing Apple just invest $500 million in MP Materials this morning as well. I think that these data center spend, these nuclear spend, space, like all this isn't just going to be a 1 or 2 year like vacuum of spend. It's going to be the beginning of a compounding spending behavior for at least the next 5 years, probably decades. And it's something that's a necessity and something that I don't know how the deficit's going to work from it. There's going to hopefully be some reallocations, like maybe less money towards the legacy defense players, security players like missiles, jets, tanks, etc. But it's something that's a necessity because if we let China kind of catch up in the AI race, that's huge. Like that would be awful. And the only way for US to maintain their strength in the world and show everyone who's boss is them being the AI leaders. And you can't. The risk of under investing in that is far greater than the deficit getting worse.
Yeah. Let's stick on the data centers a bit because Meta CEO Mark Zuckerberg announcing huge plans to roll out some multi-gigawatt data centers, starting with a Prometheus plant in Ohio and a Hyperion plant in Louisiana. One thing that's fascinating to me about these data centers is they're popping up in places that aren't known for tech innovation. So they're in rural parts of the country. They're in places that are outside of the coasts. Zuck comparing the computing footprint to a swath of uptown Manhattan, so including Times Square for obvious reasons, he said. Obviously, nuclear and energy names popping. And Jake, I want to go to you because I know you brought up Oklo 2 weeks ago. So you've been probably even before that you were tracking. But they popped sort of nano nuclear, new scale power. But I know you have some charts to show us specific to Oklo.
Yeah, no, Oklo, I mean, Oklo's an interesting one, and I'm pretty excited to share this one. I'm going to share just my window because I feel like when I shared my full screen, it just completely freaked out on me a couple minutes ago. Anyways, so Oklo is a really interesting one. So there's really two ways I look at the market. One is kind of these volume shelf setups, right? So you can have a volume shelf pretty much anywhere on the chart, i.e., if you're looking at something in a big downtrend, you can have a lot of price aggregating at the bottom, and then you can have the lower indicators signaling. So like what we just went over with BABA, the RSI percent range, MACD, all signaling, while price is kind of hanging out at the volume shelf. Now, what's a little different and sometimes a lot more powerful is what we saw in Oklo is kind of this signal, but in a pretty strong uptrend. So generally, this signal is something that you see on a pretty strong downtrend, like we saw on BABA. Now, I guess you could argue that Oklo was in a downtrend over the last month, but really it was just kind of pulling back after a massive run from April. But a lot of the time, you don't really have this signal here where the MACD the MACD and the Williams percent range are kind of signaling like the stock is bottoming on a strong downtrend. In this case, you just had this consolidation, and we haven't even seen the MACD cross to the upside yet. The MACD is just curling to the upside now. Now, keep in mind, a lot of the time the MACD can cross, and sometimes that's the move, right? The MACD is a function of price action. So the MACD crossing sometimes is almost your sell signal. Now, I don't think that is the case for Oklo. I think Oklo is probably going to hit new all-time highs pretty soon. It had a little bit of a pullback pre-market, and then everyone realized and forgot that these small modular reactors are essentially a big part of the AI play. So, I think people are like, oh, wait, we're selling off to go buy AI names, but this is kind of I don't want to say the picks and the axe, but I mean, you have to have this massive source of energy to run these data centers and everything, and Oklo is kind of at the forefront. And as I mentioned, it's just kind of known as kind of when you think of nuclear stocks, this has been kind of the one that a lot of people think of. So, very simple. You had the volume shelf set up. You had the MACD starting to curl to the upside. And keep in mind, right, the histogram is telling you the difference between the blue and the yellow, the MACD and the signal. So when you do have this dark red go to pink, that means that you're even though you maybe can't see it with the naked eye, you are starting to get the curling. So pretty much back early July is when we actually started to see that curling and that momentum starting to kind of fade to the downside, and you started kind of getting that reversal. And so on top of that, you had the Williams percent range starting to get into oversold territory. The thing about the Williams percent range here is that it still has room to move up. The RSI was never really signaling here, simply because that's just how strong Oklo is right now. I mean, if you did move to the 5 period, so the 5 period is looking back 5 days. There's 5 trading days in a week, so that's why I use increments of 5 on the daily candle chart when looking at these indicators. The default is 14, but if you really think about it, like 14 is such a random number if you want to like be mathematical about it. You're looking at 2 weeks and 4 days. So when I am looking at the lower indicators, I am using, at least on the daily chart, I'm using increments of 5 because there's 5 trading days in a week. On the weekly candle, I'm using increments of 4 because there's 4 weeks in a month. And then on the monthly candles, I'm looking at the increments of 3 because there's 3 months in a quarter. So, technically the RSI was signaling when you get down to like the 5 period, it gets very, very choppy because you have less data that the RSI is kind of spitting into that mathematical calculation to get the indicator. But you can see here, if we did switch this to the 2-week look back, i.e. the 10 period, it never really became oversold, but the Williams percent range did. And so when you have the Williams percent range doing that and the histogram starting to curl up, that's when you take notice, especially when price is holding at this volume shelf. And then we finally got that move up with the $70 billion AI investment or whatever. The government just keeps coming out with these triggers for all these names. First it was drones, now it's nuclear. So if you were to ask me, I think we're probably going to see new all-time highs for Oklo within the next week. I am positioned for that. I did trade shares because the options on that, yes, they do move a lot, but if you're trading a big options position and you're trying to deal with a 5 or 10% spread, the slippage on that big position is just, for me, not worth it. So I went with shares on this one.
And then, so with Oklo, that's the one you're sort of focused on, but are there any other nuclear names that are sort of on your radar, or you found the one that you like and you like your setup and you're sticking with that?
Yeah, I mean, if like the whole sector's moving, I'm not going to go try to just trade all of them, right?
Yeah.
Because the more I generally am not trading more than like 3 stocks at a time. So to be trading more than one stock in the same sector, it would just not make sense to me. And because think about it, like if you're trying to trade, unless you have the whole thing automated, trying to manually trade multiple stocks in the same sector, I'd rather just have high conviction on one, knowing the sectors, the tide is rising. So like CCJ, I mean, all of these look good. You've got the volume shelf here as well. Price is just about to launch off of it here. So I could definitely see CCJ. Rising tide lifts all ships. LTBR is another one that is a smaller cap name, but I mean, it moves. It was one of the bigger movers yesterday. And it does have these kind of boom and bust cycles, as you can see over the last year or so. But yeah, I think all of these names are probably going to hit their previous highs that they saw back in May.
Yeah. I was just on, when you were showing the charts, Jake, I was popping over to the Oklo investor relations site and just going through their deck. And it's interesting, Shay, like the first setup slide in their deck is about like government dollars being allocated differently and all of the proof points around the push towards nuclear. And then it gets into sort of where the state of the business is today. So for you, looking kind of like long-term thematic, how do you balance like the clear signals that a lot of money is moving in this direction from the federal government? As Jake mentioned, it seems like they're just going shopping lately. How do you balance that with, okay, then you look at the state of the actual, operating a loss, factors like that. How do you sort of balance those two things if you're thinking in the long term?
Energy is 100% part of the calculus of the new digital economy, along with AI. You can't have AI without investing in energy. It doesn't make sense. It would just be too imbalanced. Like if AI is the compute layer of the new economy, energy is absolutely the constraints. And data center, the build outs are absurd. How many data centers are going to be built out over the next 5 years? And the grid capacity is already strained. So these, you really need these like renewables to keep up for AI to reach its max potential. And I think a lot of people just anticipate Chernobyl or all these like legacy nuclear sites or nuclear systems and think like, oh no way, we're gonna reprioritize that. But like, I'm sorry, but we have to. Like AI is just a once in a generation type of theme that will change the world completely and not just a flip of a switch forever. So I think that you need like what Oklo is building is these small scale, fast reactor nuclear systems that can be deployed directly next to the nodes of demand. So like the when I say nodes of demand, think these hyperscale data centers, think the military bases, which is just getting started, think these remote industrial sites. And the reason I love Oklo over all the other nuclear names is it isn't a utility. A lot of the, I'm not saying being a utility player is bad, but for me specifically as a thematic, I'm not really, I don't love investing in utility companies, and Oklo isn't that. It's a power appliance in my eyes. So I think the reason I think it's more of a power appliance than a utility is the way their approach is for nuclear is a lot more modular, it's a lot more dispatchable, and it's a lot more it's built for the AI always on AI era. And I think that um, it's just kind of perfectly fit with the theme in the moment. But make no mistake, like this is not a cheap stock anymore. But maybe it will never be because you're seeing AI infrastructure spend just continue to increase and increase far greater than expectations. That's going to carry the energy bucket along with it. So maybe the revenue timelines are still years out for Oklo, and nuclear development is notoriously slow moving. But I do believe the inevitability is very real where AI won't be able to scale local won't be able to scale to its max potential without local, stable, high density energy, and the grid won't be enough. You're going to need like Oklo's reactors are essentially going to be essential. I said essential twice there, but I just think that it's going to be a necessity, and I think Oklo is in a really great place to capitalize on that.
Yeah, I mean, one thing that's interesting that you called out here is like when you mentioned like yesterday when I was like, all right, when would you go in on Bitcoin or whatever? And you're like, I'm waiting for maybe a black swan, maybe some quantum news, it'll kick it down 40%. I'm like curious when you're talking through sort of the AI demand in nuclear, like what would that event be for this space? Like I can't think of something that would happen that would just kill the world's desire for AI. It seems like to the word used, an inevitability. Nothing's guaranteed. There's obviously competition. Other people could sprout up with better solutions. But that seems like a case where I'm like, what would happen where that would, and maybe, you know, the smaller stocks could move significantly, but as a thematic, like what would knock that entire nuclear energy space down? It would have to be some sort of energy innovation, right? That would surpass nuclear, and that just doesn't seem likely.
It would be more of a timeline push, in my opinion, of like people are anticipating 3 to 4 years. If it's 6 to 8 years, that's a huge difference. That could be the case, guys. Like, don't say it's a guarantee next couple years. Like, it's the slowest moving industry of all industries, and there's a huge safety component where you can't rush the existing process. Yes, the demand might accelerate attention towards it, but the red tape bureaucracy will not change. Honestly, I don't want it to really as well because the implications of anything bad happening is awful. So I think that to answer your question, Katie, like timeline getting pushed back is a major one. I don't know, maybe some type of if they're in I don't think this is the case, guys, but like in 2 years, data centers, there's not a real ROI on AI, and data center buildouts are going to slow down.
Yeah.
And maybe a lot of the pull forward demand that the whole theme is experiencing was offsides for how aggressive they are expecting the next 5 years to be. That could be the case, but you never know. These early sector growth themes, there is usually some kind of black swan event. Think for quantum computing, the Nvidia comment,
Yeah.
50% haircut in 3 days across the board.
Yeah.
Something like that. Yeah, something like that could happen in nuclear, but I will buy once that happens. Like I'm waiting for something like that to occur.
Yeah. Well, when a few moments ago, and Jake was showing us his charts, that was, of course, the opening bell. S&P rising following Nvidia's lead. The CPI ticked up a little bit in June, but basically came in as expected. So consumer prices rising 0.3%. This broke the recent cooling trend. Core CPI, which excluding food and energy, rose 0.2%, a little higher than May. Year-over-year inflation hitting 2.7%. So economists are expecting delayed inflationary effects as businesses are exhausting their pre-tariff inventories. The Fed is obviously under pressure to cut rates, but remaining cautious. There's some new headlines there of some other political levers that the administration is pulling against Powell regarding overspending on, I think, a new Fed building or campus, whatever you're going to call it. So that continues to play out, and every week it seems like there's new names floated for potential successors to Powell. I feel like just putting on my PR hat that's intentional. They want to see how people react, what people say to the different candidates, and that'll help dictate who's next. But either of you guys, any thoughts? Like, I guess, do you factor in any of these macro readouts, Jake, into your moves as a signal or something to act on, or are you're less focused on those?
Pretty less focused on that. I'm like, for me, I think the month-over-month CPI is what the market cares about here. I don't think it really cares about year-over-year. So, with the month slightly lower than expectations, month-over-month, I think is what is kind of fueling this. But yeah, not a ton. Price generally will tell you if the market cares about it or not. So, and that's what I'm focused on, is price over kind of what the hard numbers are.
I mean, inflation is such a backstory now. I think it's the world's worst kept secret that AI is going to be extremely deflationary. So the productivity boom we're going to be seeing for years and years to come is going to happen with less human inputs. That's going to be deflationary. So I also think that true inflation is like a one handle right now, like 1.5. Don't quote me on that. But this print right here is reflected on maybe I haven't looked into it, but maybe some tariff bumps on stupid line items like home furniture, appliances, stuff like that. They're exposed to Chinese markets. But I think AI is the main event right now. As long as that's the case, everything else will just take a back seat. And this Q2 proved that. Like Q2, the reason we had such a V-shaped recovery was because of AI. Like these hyperscalers were still investing substantially. The government was investing substantially in AI initiatives, which caused a picks and shovels effect across the board. So I think that I'm happy that inflation's a backstory now. We're not seeing any reignition on it, but it's going to be a very deflationary environment eventually. So like, I don't look into it too much with any weights.
Yeah, it is fascinating. I mean, I would like to see like public opinion polls, because back around the election, this was like the number one thing. And I'm wondering if that's still the thing for people. It's always interesting to see how different outlets cover these readouts. Some of them say, oh, it's nothing. Others are like, oh my God, the trend reversed. It's probably, the story is somewhere in between. I want to go over to crypto for a second, though, because BlackRock had some interesting signals in their earnings call, or in their earnings report this morning. They're obviously one of these institutions that is like blurring the line between traditional finance, crypto. They're leaning in. They recorded record inflows into their crypto-related ETFs on the quarter. So a 366% increase in flows, amounting to $14 billion in the second quarter. So this was a huge jump in these types of ETFs quarter over quarter. Obviously, it shows growing retail institutional interest in digital assets. No surprise there. They also saw more demand in emerging market ETFs. It's always interesting to see the ETF flows, because I think that gives high level, generally, directionally, where people moved. Jake, when you were on last week, you were talking about looking at crypto as like a risk-on signal. How are you feeling now? It's crypto week. We hit an all-time high since we last spoke. You seem to have called that to some degree. You were definitely calling something. Where's your head at right now with things like Bitcoin and crypto overall?
Yeah, I mean, I can pull up a chart here. I think Bitcoin just in general, it had a huge move. So, yeah, I think understanding the personality of a stock is really important, whether it's a stock or crypto. Um, and Bitcoin has strong moves, but it also has strong moves in both directions. I will say that, like with Bitcoin pulling back, it does make me a bit more hesitant for sure with the overall markets because, and let me share my chart here.
Well,
You know,
while
and
he's saying that as well, the AI stocks are pulling back as well. So it looks like
Mm.
the news might be being a bit priced in right now on this deal.
Yeah, and like if you look at January, Bitcoin topped out before any of the other names. My upside target is 130K, but if the market's going to front run that pretty obvious Fibonacci extension, then for me, I'm not you know I'm kind of positioning myself for a pullback, right? That's why I got into China because China has almost been a hedge against the markets. It was my only options position. So as I mentioned, generally if I'm thinking the market's a little overextended, I'm going to go shares. So that's why I have Oklo shares. One, because Oklo is just way too volatile to be trading options on. The damn like share price trades like an options contract most of the time. But ONDS, I have covered calls on that. I'm probably going to get completely called on that if it's over $2 by Friday. Totally fine with that because that has just been a trade that's done very well for me. And so if that happens, it's going to free up a lot of capital for me. So naturally, just with the covered calls, with Baba, I took a little bit off the table with Baba just now. I had a pretty big position in that on the options side of things. So I'm definitely positioning for a bit of a potential pullback here. And seasonally, we are getting to that point as well where, people just, seasonality becomes a self-fulfilling prophecy a lot of the time. So, everyone starts realizing, ooh, we're getting close to August. Maybe it's time to start taking some money off the table. Enough people do that. Enough people kind of do their last vacation of the summer. You get low volume. Low volume is a thing in the summer. The first half of summer, it's generally low volume kind of grinds to the upside. Second half of the summer, if low volume comes in and you get any type of increase in supply, those moves can be pretty drastic to the downside, kind of like almost like a flush. But if you look at Bitcoin from the daily chart, I mean, Bitcoin did exactly what it was supposed to do, right? So we have a different measured move here, and the measured move is just essentially what we're measuring for that extension. So I do not use Fibonacci levels if I'm looking at something that's not at all-time highs because you can just reference something to the left of the chart, right? So when Bitcoin started breaking out here back last week, you're like, okay, well, where was it previously? Well, if you start looking to the left, it never was there. So you can't reference any previous price action, a gap, a VWAP, a moving average, because you are kind of in price discovery mode. So that's when I start using the 1.618 extension. And I mean, you can't really get much cleaner than that. And Fibonacci is a very technically used tool for technicians, and Bitcoin is a very technically traded asset. So it doesn't shock me at all that we had a slight overshoot of the 1.618. We're pulling back and kind of stalling at this area. But at the same time, we just got a pretty decent intraday move here. I mean, I think I was just looking at it as 117.3. Now it's 118.3. So that's the kind of market that we're in right now. Oklo, right? Like I was watching Oklo yesterday. I mean, I'd watch it. It was at 57.20. The next thing I looked, 2 minutes later, it's at 55.80. So the market is just moving that fast right now, and that's sometimes a good thing when you're moving up. Sometimes it's not a great thing though when you start to actually kind of roll over and people start taking profits. So we'll see what happens. I wouldn't say this is my favorite looking candle at all on the daily chart for Bitcoin. If it were to get a pullback, this is when you simply just use that anchored VWAP. You look at the most recent pivot. The most recent pivot, i.e. the low before we continued up, was on July 8th. So you anchor a VWAP from that point. And if the VWAP will turn on here, okay, you can see it almost acted as a perfect level of support here, even this morning. So this will be the main area I'm watching for, right around 115.925 at the moment. That will probably continue to move up a bit because price action is trading above it. So the more price and volume that are coming in above a VWAP, the VWAP is going to continue up because it is an average. So yeah, I would just say right around 116K is that VWAP. If we break below that VWAP, this previous resistance zone 110.550 to 111, pretty much 112, is going to then be your potential level of support. Anytime you get a breakout like we had, the default assumption is you are going to pull back to that breakout area, consolidate, and then continue up. So it wouldn't shock me at all to see that, especially as we enter kind of that more seasonally kind of iffy part of the year. It's not always bearish, but a lot of the time you do get a pullback, especially if we've had such a move up like we've had. So like I said, I have gone a little bit of cash with the Baba trade. I still have a decent position there. But this is the time of the market where I do start kind of switching to shares versus trading options. And then, like I said, Baba to me was almost a hedge. It's gone down as the market's gone up. So if the market starts to pull back, you're probably going to see money rotate into China names, and that's what we're seeing at least for now.
Yeah, let's stay on crypto for a second, but flip to a different view, a different chart on a different player. So let's look at coin. We're going to show you guys a real-time sentiment chart that's baked into Stocktwits Edge. This basically shows you a bunch of different factors leading into what the community is feeling about a stock in a snapshot of time. So we're looking at Coinbase. They hit their highest weekly close ever last week. But after a 180% 3-month rally, sentiment and message volume are well off their highs. And this chart was curated by editor-in-chief Tom Bruni. It's not investment advice. He doesn't hold a position in Coinbase at the time of this show. But it's showing you that this isn't a bearish signal yet, but it does suggest retail's being selective. So it looks like they're waiting on clear confirmation or better entries. And traders are watching 340 to 370 as a new key zone to hold. These charts are available to you if you have Edge and Stocktwits, but it's interesting. It's a completely other way to chart things and graph things and make decisions as an investor relative to what Jake just showed us. But potentially using these in tandem, exploring them, you can do that in the app. Shay, I want to ask you one thing I meant to ask before at the top. Trade Desk, S&P 500. What do you think about that? Is this like their redemption arc? I know they were in the doghouse a bit. Question one. Question two, do you think they deserve to be in there above Robinhood?
I don't think so. I think Robinhood deserves to be in the S&P 500. I don't know why they aren't. It's weird.
Personal.
It feels personal.
Yeah.
It feels like, I don't know, like because they just did Coinbase like a month or two ago, they can't do another brokerage. I don't know why. Maybe that's the case. Diversification. I really don't know what actually conversations are had when they make these decisions. But we had Datadog last week. We had Trade Desk this week. I think, I don't know, usually it results in a 15% move. I don't know what Trade Desk is at right now. But this is a name that's interesting. Like, it's something that I need to figure out what to do with because I got the gift of the S&P inclusion squeeze up.
Yeah.
It's a name that's, I'm in cash raising phase right now. I don't think we're gonna have a substantial pullback. Who knows? But I just think right now the way my portfolio has acted the past 3 years, I kind of want to play defensive until there's actual blood in the water. Like right now, the waters are very very sunny. Like it's just sunny and nice. There's no choppiness. For a long-term investor like me who doesn't really trade, like that's typically a time where I gotta prepare for the bad days. But Trade Desk, like right now, like they're still down 30% for the year. Like if you want to pick a name that's a lagger, like there aren't that many high-quality laggers out there. This name was justified to go take that $125 haircut to looks like 50, which is a disgusting haircut I sat through due to their awful rollout of their AI products that they revised. But it's almost doubled now since that in 3 months it's almost doubled. So I don't know, this is a name where like it's great. We needed some
They're up
catch up.
11% today, but to your point,
Yeah.
still down pretty bad if
Yeah,
you
still-
zoom out a bit. All right, so Robinhood just getting the short end of the stick. I kind of feel bad for those guys, but I don't, because they're driving around the south of France in cool cars, and they have cool clothes, and they're just the cool kids. So I think maybe people are just trying to ice them out a little bit. Maybe they're trying to humble those guys a little bit.
Well, you know what would be really funny? Daniel and I were talking about this yesterday. SoFi is eligible now for the S&P 500. If they get in before Robinhood, it would be gold of the type of material you'd see on FinTway.
SoFi, I didn't realize. I mean, they're holding. I think they hit. Was it last week they hit all-time highs, or like they crossed $20 a share last week, and now they're at like 21.
Oh, it's double in the past 2 or 3 months. It's on a freaking tear. It's on.
Yeah.
Listen, if it breaks $28, watch out. It's gonna have a Robinhood like move, to be in my opinion. Like, it needs to kind of hit that all-time high, which I think it's $28.
Yeah, and you were talking about that last week. That's sort of pent-up carryover demand. I missed. You mentioned missing the boat on Hood when you were on the fence at $20 a share. It's people saying, "All right, what's the next thing I can jump on?"
Yeah, and SoFi was that. And don't be surprised if you don't see eToro, Webull, like if the sentiment keeps getting bullish and bullish. But it's tricky because it's also earnings season now. Like, we had better than expected bank earnings this week, so like I think all is fine. You had JP Morgan call out that consumer spend wasn't as severe as people anticipated. It's not booming, but it's not as bad as people anticipated. That's a big thing from someone like Jamie Dimon to say. So like, I think that probably is a good pre-read on the whole industry for this cycle. And yeah, it's hard to be bearish. Like, I'm raising cash like for like a rainy day, but it doesn't mean I'm bearish. Like, I don't see a reason in the market except for multiple expansion on a lot of names and specific hot pocket trades that are like, whoa, that seems bubbly. But other than that, like, it's hard to poke a hole in like why we shouldn't continue up to the right now.
Yeah, I mean, when Diamond comes out, they reported this morning, it was basically like, things are pretty good. He's talking about how resilient the economy is, the tax reforms, deregulation, all citing positive factors. He obviously was balanced. He cautioned about some persistent risks, the geopolitical stuff, the tariffs. But, you know, when Jamie Dimon's coming out, it's like, yeah, pretty good. That's a good way to start the earnings season, I would say. Shay, you briefly brought up Webull. And Jake, I'm curious, because we talked about them a few weeks ago when you were on here. Do you have any, is that one you're still tracking on your end?
Yeah, I do track it. I flipped it. So when we talked that day, I had bought it around 11:20, and then right after we got off the show, I just kept buying the shit out of it, or excuse me, crap out of it until I pretty much didn't have any capital left to buy. So I sold. Let me share my screen here real quick. Yeah, I sold the covered calls for 14 for that Friday, and I ended up actually buying those back at a slight loss. Like, I definitely am glad I bought them back so I could get out of the position. So it was a huge trade for me. We're kind of back to the volume shelf. If you remember you and I talking last time, this is kind of an interesting thing actually to come back to. So if you remember when we were chatting about this, we discussed kind of this volume shelf right here. This was the day that we were talking about it. I mentioned this was probably your kind of your supply zone, initial supply zone. Then this kind of flipped to kind of a base for price to move up off of. And then if you look at kind of just that basic resistance zone that we were watching, generally right around this area, we had a slight overshoot, but we closed right at it. And then they had the dilution news or whatever news it was, the market didn't like it. To me, I read it as dilution. I'm not sure what Shay thinks. But at the same time, you have to have dilution to grow. It's just that a lot of people get spooked because, a lot of people think of dilution as short-term, kind of a bad thing. And in this case, the market did kind of treat it that way. But now we're back to the volume shelf. We're kind of creating this base. If you're an Elliott wave person, you kind of had your initial impulse move here, this wave 1. You're pulling back here now over the last week and a half. So if you were to get kind of that next wave up, we could be finally moving up. We would really need to close above this previous high here, which I think was at like 38. And then if that happened, this gap is still definitely something I'm watching at 1613. So yeah, like Webull is definitely on my radar for sure. I'm not as concerned about dilution as I was with the warrants, because the warrants just had a set date and everybody was watching that date. That's kind of why I had mentioned I'm not buying this until that date is done, which was June 30th. Whereas this was a little kind of more just kind of like, hey, we are doing this deal for $1 billion type thing. So yeah, I mean, it's definitely on the radar. If I were to buy it, this is another one that I would buy shares on versus options. The options are just way too volatile. The spreads are too big. Does that mean that you can't make a ton of money on them? No, but the options are pricing in big moves. And if you don't have big moves, I mean, if you look at the options prices over the last week and a half, you've probably seen some massive decay, because if you're not getting these big moves that are priced into the premiums, then you're going to just, get hit pretty hard. So these are definitely options that are very similar to Oklo, where the spreads are massive. If you're trading a big position, like if I'm going into a position that I want to get out of, like I pretty much have to sell the bid. And if the bid and the ask and even the last price is the difference of 10%, that's huge slippage. And that's just something that I have dealt with in the past. Actually trading Celsius, when Celsius had the big move up, I had a pretty large position, and just trying to get out of that position was brutal because the spreads were so big. And yeah, so it looks good on technically kind of for now, but it would be one that I would take shares on versus anything. But I think I am just going to start raising some cash here in general. If I do buy something, it's probably going to be Tesla before earnings. And that's one that I would like to start buying a large position on because I can sell covered calls on that for a lot of money per month. So it's a nice income generator.
All right, we got Tesla. That's next week, right?
Yeah. Wednesday, 23rd, I think.
Yeah. Well, we have more earnings coming this week. Shy, I know you're watching ASML, and what was the other one?
TSM,
TSM,
the kingmaker.
The Kingmaker. That's tomorrow? Both of them?
That's Thursday.
Tomorrow,
17th
Thursday.
is TSM. I think tomorrow is ASML.
I feel like a lot's happening. I just like a bit of a non sequitur to end things. DraftKings in talks to acquire prediction market. Railbird Exchange. One analyst ups their price target on the news. The prediction markets, man, it's going to be really interesting to see how the regulatory environment plays out. I know, Shai, you're not the biggest DraftKings guy ever, but this is, right down the money of Howard Lin's and degen economy. I think people are seeing what Polymarket and Kalshi are doing and saying, why not us? I guess it makes sense for them. Robinhood's got that now. Now DraftKings wants a piece. And it's all converging. All of these platforms converging into one thing, which is crazy. So that's happening. And also, I don't know if you guys saw last night, one of FinTwit's own was on The Daily Show. Kyla Scanlon, author of In This Economy, was on the freaking Daily Show. If you're on FinTwit, you know Kyla. She does macro commentary. This was so cool to see, and I think so indicative of how mainstream all these things are that we talk about. But I thought that was pretty freaking cool and something we can all aspire to. I don't think I'm going to make it on there anytime soon. But I'm rooting for both of you guys. This is so freaking cool. She's in FinTwit. She's one of us. But shout out to Kyla. That's awesome. So yeah, we can dream. We can dream big on this show. First you come on the Daily Rip Live, and then, you go on the Daily Show. She's never been on this show, but I hope someday she will be. Guys, let me give you each any sort of final parting words, thoughts, as we wrap things up here today. I'll start with you, Jake.
Yes, as I mentioned, I am definitely getting a bit more cautious here. If you look at last year, we did start to top out right around this time of the month. I think we've actually had a stronger move up into this time of the month than last year. So that is why I am definitely in share positions versus options. The one issue that I always hate during earnings season is the fact that you really don't have to worry just about the stock you're in. You have to worry about, okay, well, I'm in Oklo, but NNE is reporting tomorrow, and the sentiment from that could actually affect Oklo. So there's just a lot of variables you have to kind of juggle when it comes to earnings season. So I, a lot of the time, do go heavier cash during earnings season, just because the technicals, you can have a really strong technical setup on something, and then their competitor or their partner says something in their earnings call that completely moves that market as well. So in order just to kind of keep an edge, I do like to pull back a little bit during earnings season, especially it's been a very solid summer for me. And I want to keep those gains. I don't want to give them back. So other than that, I do think nuclear is probably going to continue to do well. Oklo had a pretty interesting pullback to the mid 59s. It's already back over 61. So if you are going to trade those names, just remember that the personality of these stocks, it's not for everybody. And you just have to know what your personality can handle. And other than that, yeah, I booked my Stocktoberfest ticket last night. So we'll see you guys in October.
I'm excited. We need I hear there's costumes. I don't know if we'll be provided with the costumes, but we will be there. Shy, I know it sounds like you're waiting for choppier waters. You're on your little canoe sailing in calm lake waters this week. Any final thoughts from you before we close things out?
Yeah, I mean, I think we overextended in near term. I have a 15% cash position entering earnings season. I think we get a pullback. By pullback, I mean QQQ hitting 520. I think it's at 560 now. Like, it's going to be like a 5 to 7% pullback on profit taking. A lot of people like to front run the not owning stocks in September, and they do that usually in August, trying to think, oh, I'm gonna get ahead of the game. But that's why August is usually a bad month. Earnings season is going to show a lot of strength in AI, so we're gonna have a high floor in any kind of pullback. But I just like what Jake said, like, we've had a really strong year, especially since we've been buyers of these like major dips. So it's not it's okay to profit take a bit and raise that cash position to find those irrational dip opportunities from earnings season.
Yeah, I mean, it's weird to think where we started Q2 to where we are, that being the same quarter. That's crazy. We have some Fed commentary today. We have more earnings. We will be back first thing tomorrow to bring you all of the market news and headlines. Keep putting in your comments in the chat. Keep hitting us up on X. We love to hear from you, and we hope to see you right back here tomorrow morning. Thank you, Jake, and thank you, Shy, and we'll see you tomorrow.
See ya.